Hello, everyone, and welcome to Canada CPA Online Academy, sharing the wisdom. So, we have been doing this series on Canadian auditing standards. Today, we are going to discuss CAS 260 communication with those charged with governance. If you have been following the channel, you would see that there is a separate playlist that lists all the auditing standards, and I'm discussing each auditing standard one by one, especially for those who have the assurance as their role for day two. It is important to know all the Canadian auditing standards and to be able to quote them in your cases while writing the CFE. If you are new here, please give a thumbs up, like, share, subscribe to the channel. And I post regular CFE updates for preparation of the CFE and general CPA career and other matters. So let's get started. So today we are discussing CAS 260. So in various uh, standards, you will find that there is a reference to this standard communication with those charged with governance. So in this standard, if you see that first they will explain the scope, role of communication, and if you go to the other explanatory material down here, there is a list that specifies which standards. Okay, so these ones. So all these standards require everything to be communicated with those charged with governance. So you will see most of the things require a communication, because audit is always, we are say, like, it is a two-way process. So we are auditing the financial statements, and at every stage of that audit, you are supposed to be communicating with the governing body. So that includes the initial planning, understanding the processes, internal controls, then assessing the risk, materiality, and then communicating if any misstatements are found, and for finally forming the opinion. So all different stages you should be in communication with the management. Now the standard starts with uh, the scope. So the scope of this CAS is it deals with the auditor's responsibility to communicate with those who were charged with governance. Now, who are they who are charged with governance? So it may be different for different entities. So it could be from the owner manager to an audit committee. So depending on the size of the organization, the person who is charged with governance would be defined differently. Because in smaller organization, if the owner manager is overseeing everything and looking after the financial statements and controls and everything, then it would be your person to with you who you are communicating. But in a bigger organizations, there is a structure. There is a board of directors who is appointed by the shareholders. There may be an audit committee even for public companies. So in that case, you'll be reporting, like, not reporting, you would be communicating with the board of directors, or if there is an audit committee, you would be talking to audit committee. So that would depend. So the main criteria is who is responsible for the governance in the company, and who is overseeing the financial statements and decisions related to that, like internal control processes and all that. So that would give you an idea who that entity is. So it says that this CAS does not establish requirements regarding auditors' communication with an entity's management or owners unless they are also charged with the governance. So you do not have to report to the owner as such unless it's a small company and they are the ones who are in the governance role itself. Now, the what is the role of the communication? So as we were saying, the role of communication is to keep the management informed about what is happening in an audit, so it doesn't come as a surprise at the end. So at every step of the audit, you are communicating, whether you're planning, you're scoping, you're checking the evidences, you're assessing the risk. At every point, whatever your findings are, you're discussing that with the management. So understanding the matters related to the audit in that context. So it could be everything from there. For example, those charged with governance may assist the auditor in understanding the entity and its environment, in identifying appropriate sources of audit evidence, and in providing information about specific transactions or event. Now, especially this is relevant if it's first you're doing the audit for the first time and you don't have an understanding of the entity's structure or internal control or the government governance that they have set up. So in that case, it is very important to have that initial discussions to understand the entity and its environment and how they have structured their controls, because those internal controls are finally going to affect your ascertainment of risk and materiality, and uh, also the evidence creation and all these things. So it is an important step, if especially if it's a first time audit. And for recurring audits, whatever the changes, if there are any changes from the previous years, changes in the internal controls, changes in the management, or things like that. Uh, those charged with governance in fulfilling their responsibility oversee the financial process, thereby reducing the risk of material misstatement of the financial statement. So that is an important aspect of the audit. Now, what are the objectives of the auditor here for this standard? The objective is to communicate clearly with the management. Now, in the sense that it could be an oral, or the methods or modes of communication would come later in the standard, but it could be an oral or a written communication. But even if it's an oral, you should be following up with an final written communication based on your discussions, and it should be clear so that there is no ambiguity and there is a paper trail or evidence or documentation that is created that this has been communicated to the management, especially in cases of where there are some discrepancies, there are material misstatements that you have found, and then there should be a documentation that you have communicated that to the management. Second is information relevant to the audit. It is important to have that understanding from or explanation from the management side of things to identify whether it was it was a fraud, it was an error, especially how much aware the management is about happening uh, or the risk in the financial statement. And then also timely observations arising from the audit that are significant and relevant to their responsibility to oversee the financial reporting process. So as we mentioned before, it should be every step of the way so that it shouldn't come as a surprise at the end of the audit that you're issuing an qualified opinion. So at every step of the way, you should be in touch with the management or the governance body, that whatever your findings are, so that they get a clear picture of how the audit is progressing. Now there are some definitions that we have discussed, like for those who are charged with governance, so who are they? So it could be an entity owner manager, or it could be like an management board of directors or audit committee. So then yeah, so the matters to be communicated, and now the standard specifies what needs to be communicated. So first is auditor's responsibility in relation to financial statement audit. So you are making it clear that what are you auditing and what is your responsibility related to this part of the audit. And at the same time, this is just an you're expressing an opinion, but that doesn't relieve the management from their responsibility. So the even if you are expressing an opinion, it is still based on the audit, and it does not give you a full assurance that everything is correct, right? So it does not relieve the management from implementing internal controls or checking for errors or checking for material misstatements in the financial statement. That responsibility still lies with the uh, governance body. So we are making that clear to the governance body. And then the planned scope and timing of the audit. So what is the timeline? When are you starting? How would you be progressing? What is the evidence collection? When would be the report issued? So what is the planning and scope and timing of the audit? It should be clearly specified. Then significant findings from the audit, as we have discussed that uh, any misstatements or another thing is if there are any errors in the implementation of accounting policies, or sometimes it happens that there is some change that is coming in the accounting standards. If it affects that entity, what would be that effect? Are they prepared for the changes? What would be the impact of the accounting policy on the financial statement? Because sometimes, suppose if it is going uh, uh, changing from ASPE to IFRS, and there is a change in the provisions, accruals, or things like that, then there would be an impact on the financial statements. So all these matters would have to be discussed with the governance. And similarly, accounting estimates or financial statement disclosures. In accounting estimates, it is important to identify how they have arrived at the estimates. What is their method of calculation? What is the supposed rate of discounting that they have assumed? And what are the supporting basis for all those things, and your findings related to that. Another thing is, if there are any difficulties that you have faced, that you were not able to get the proper information, someone was not cooperating or not available. So if there are any difficulties that restricted your scope as such for the audit, then you have to discuss that as well. And or any other significant matter that arises. Now, it is also important to communicate the auditor's independence. So in case there are any relations or with the team, or any network or firm or any interest, then that person is not included on the team. So it is important that a statement is issued that they have complied with all the relevant ethical requirements regarding the independence, because the integrity and independence is the very basis of the audit, and it has a very high regard in the profession. So it is important to communicate that that independence is followed. And then we reach to the final communication process. So what is the communication process? So you can decide it with the management, how often you want to communicate or how you want to communicate it. Would it be a meeting, a presentation, a formal report, or whatever? And then as per that, you can keep them updated throughout the process. So it lists the forms of communication, establishing the process, timing of the communication. But whatever you're discussing, there should be a documentation. So even if there is an oral discussion, there should be a summary, or it should be made at the end of the meeting, and should be exchanged in written to follow that documentation requirement. And then in explanatory material, they discuss in depth about few of the aspects. And as I pointed out here, they give you the list of all the standards that require this communication with those who are charged with governance. And yeah, that's it. I think in this standard, pretty straightforward standard. It's just that wherever you feel that it has a reference to this standard, you should mention that this matter should be communicated with the management or those who are charged with the governance. Thank you for joining in for today's session, and hope you like the video. Please share it with your friends, and uh, like, share, subscribe to the channel. I post the CFE preparation videos every week. And thank you until we see you again. Thank you.